Next guest is a chief investment strategist at UBS Wealth Management in Singapore. Kelvin Tay joins us now. Kelvin, good morning. Thanks for joining us. Kelvin, on a day like today and after a week like last week, which saw, as we know, stocks plunging, money moving into government bonds, big movements in the currency markets, what's your advice to investors today?
I think in the current market situation, nothing's going to get spared. I think in the Asian session, you've seen that the economies which are more cyclically leveraged against the U.S. economy have actually come off very, very sharply. But amidst all this gloom, we think that there are some spaces where investors should actually use the opportunity to pick up some interesting positions.
Can you tell us what they are?
One area that yeah, absolutely. One area that we think investors should be looking at is basically the high-dividend stocks. And we think that the high-dividend stocks relative to U.S. Treasuries, relative to government bond yields are actually very, very attractive. Even where global equities are concerned, valuations are actually not a stretch by any measure, particularly where 12 months forward earnings valuations are concerned. Another area that we think might actually benefit from this whole mess is basically the Asian bond space, both sovereigns and corporates as well, particularly where the Asian local currency denominated bonds are concerned, because the Asian corporate fundamentals are still very strong, and the Asian corporates have very little debt and strong cash flows.
Kelvin, has the response to last week's events from the G7, from the ECB, has it given you a renewed sense of confidence? Well,
I mean, every time something like this happens, the G7 tends to release a statement saying that, they will be supportive of the markets, they'll come in, etc., etc. I mean, that's the usual thing, and that is the least that they can actually do. But I think, to be honest with you, after all this is actually settled, the attention will then again focus on the US GDP growth. Where is it going? Is it very weak, or is it anemic? Is there any recovery at all, or are we dipping into a second recession? And where that is concerned, our base case is that, yes, the growth and the recovery is actually pretty anemic, but we are certainly not going into a second dip. And therefore, we believe that there is certainly some value to be had where some of these stocks are concerned. That's why we're actually advocating that we should actually be investing in the high-dividend stock sector.
And what about on a regional basis, Kelvin? I mean, equities is your speciality. Which region, you've told us dividend stocks, but which region is looking the most attractive in the wake of last week's declines?
Where the regional equities are concerned, we think that the markets with large domestic sizes, particularly China, India and Indonesia, will offer investors more of a protective or defensive posture over the next few months. And that's largely also because all these three countries have actually suffered from inflationary pressure concerns recently. And with this receding of oil prices and commodity prices, the inflationary pressure is likely to ease as well. That in turn basically means that the Asian governments will not have to actually tighten as much as they had to before. And therefore, that in turn means that it will actually be quite positive for the equity markets. But that certainly is on a 3 to 6 months time horizon.
Kelvin, thanks for joining us. Kelvin Tay there, who is Chief Investment Strategist at UBS Wealth Management.